Oh my goodness. I think that um yeah, this has been it's been a long one, huh? Yeah, introduction I know was a little long, but don't worry. I will get a chance to go ahead and edit this one as well because um I don't know, like I said, when I go live, this sometimes the system, the connection, I don't know what it is. It's just always giving me a problem. So I apologize if you definitely was trying to get on and check this out. Um Hey, look, welcome to this episode of Blockchain Speaks. Blockchain Speaks is something that I'm going to go ahead and bring back to life. I was doing some blockchain conversations in the past, and then I started really getting into all of my the crypto, the passive income investments. And when the community is in an array and you see things happening out there that just don't really pass the standards, then you really have to get back into the game and see if you can help people decipher what's good, what's not, what's clicking, what's hot. So many trends out there, a lot of shiny objects, and then comes the crash. So speaking of the crash, today on today's episode, which is episode 3 of Blockchain Speaks, then we're going to talk about the recent crypto, bloodbath, if you will. The markets were red. We know that crypto went down, stocks went down, everything got hit, right? So, one of the topics that I came up with was instead of talking about like actual crypto programs, let's talk about the industry. Let's talk about things that people. You don't even have to be an investor. You don't have to be an enthusiast, but you may want to understand the industry at large and why this is so exciting for so many people. Why so many people put so much energy into, understanding where to put their money to grow their crypto. How do I get into a great crypto investment? How do I decide how much to even try out? Because if you're not sure about your crypto investment, if you're not understanding the markets, if you haven't been around for a while and learn a little bit about crypto, now there is no lack of um, pseudo experts in the industry right now, because everybody has seen an opportunity to go ahead and you know if you were kind of an institutional, quote unquote expert or institutional investor or enthusiast, and you have some background in maybe personal finance and helping people, not negotiate maybe an IRA or maybe negotiate a 401k. Maybe you're within an industry or within an agency, that handles people's retirements or investments, or even in the insurance agents, because a lot of the insurance companies have a financial, retirement fund type setup, and they educate, their clients on those things. That's cool, right? And then crypto sneaks up and it becomes very popular. You have the Bitcoin IRAs, you got the Ethereum ETA, you got ETFs, you got all of these different ways that you can break into crypto. And then those same people that studied, traditional finance are now coming over to the crypto side and actually putting themselves out there as if that is, the way to learn how to break into crypto, which in some ways it's similar, but in most of the ways it's not. And so you really have to do your own research, do your due diligence, and find out what it means to you, and really decide, what do you want to do in the next 12 months? You know what I'm saying? And then how do you plan on reaching your goals from a financial perspective, and how do you mean to attain your dreams and your take care of your community, take care of those vacations and all that kind of stuff. Are you traditionally going to save, enough money to where you take a vacation every 3 years? You know, it's safe. You get your money, you put it on your mattress, you put it in a shoebox, put it in your medicine cabinet, wherever you want to put it, because you don't want, the interest rates. You don't want the market to crash again and all your money is gone because it's in digital. Yeah, you could do that. But like I said, it take you about 3 years to take a vacation. But on the other hand, if you don't want to work, 40 years, if you don't want to have to punch a clock and be on somebody else's schedule and tell you when you can take a break, when you can take a time off, when you can be able to go and visit with your family in another state, another country. If you want to avoid that, if you want to find a way to get beyond that, then you're looking to grow your crypto, find an alternative way to invest in the short term, right? So what I do with Blockchain Speaks, I'm going to talk a little bit about, the bear, bulls, Bitcoin, and blockchain, because those are really the areas that mean something to most people that are investors, in crypto or in, regular investment fiat. And that's cool, right? No matter what country you're in, no matter where you are in the globe, you still have an opportunity to take whatever amount you have, and you have the ability to go ahead and create some type of wealth for yourself and your family. And that is critical globally. That's critical to anybody and everybody. That should be, that personal goal. That should be a personal right. You should be able to safely put your funds into an account, online, offline, and they should be able to give you a return on that that's reasonable, where you can actually feel comfortable that you can earn an additional income from that. And you shouldn't have to work 3 or 4 or 5 jobs. You should be able to put that money there and actually get a return, right? Because the system is already working, right? People are already working for money. That's already happening. Therefore, you just need your money to work for you. And the way to do that is to get it into a system that it's already working, right? And then you just got to find a safe and transparent system to do that. And that is some of the things that I'm going to talk about on Blockchain Speaks. Today, we're going to talk about something very interesting. We're going to talk about how the crypto crash, right? And, stock crash, everything crashed. Tesla went down, Microsoft went down. Well, I don't know, Kellogg. I don't know if you know about Kellogg. Kellogg is, it's a breakfast brand, if you will. Big stock, and I really hadn't paid attention to the stock market, but I do have, I have some stocks, and I'm very happy to have some that have grown over time. But my main focus is crypto. And so when I talk about, Blockchain Speaks, then I'm really talking about everything that has a blockchain base. And a lot of investments out there that people talk about crypto, then you don't really get the true essence of cryptocurrency or that digital asset without a base of blockchain, right? And so you don't create cryptocurrency from a non-blockchain base. If you do, it's not cryptocurrency, just saying. There are tokens out there too that are associated with blockchain projects, that utilizes a blockchain, utilize layer 1, layer 2, some deeper than that. And they create tokens from that. And then the tokenization is built off of, those particular systems as well. And so we can actually invest into these type of platforms and gain when things are going good. Now, today I'm going to talk about some of those areas that recently hit the headlines. Last week I talked about the Coinbase and how they laid off, 18% of their staff. Like, wow. Right? Talking 1,100 people got laid off because the exchange could not handle the weight of the market dropping like that. When Bitcoin drops, everything drops, right? Not true, but in essence, that normally is what happens. But what we found in this space is Bitcoin, yes, has an effect on the market. But if you can understand how the market works, how does what's the difference between a stable coin and your regular altcoins? Then when you start to understand those pieces of the puzzle, then you'll see why stable coins aren't really stable. They are in theory and in concept. That is the nature of what was trying to be closer to regular or fiat, investments and fiat type monetary system. But you really are not going to be able to make that happen. So the question I'm going to lay on you today is, if we're talking about cryptocurrency, investments and fiat currency or traditional investments, what would you think needs to happen in order for a cryptocurrency to become what fiat currency is to investments today, right? That's a question that I kind of want to put out there is, What do you think would need to happen for, crypto to become what fiat investment and fiat currency, the monetary system is today? Because what I'm trying to get you to, even think about and contemplate, does fiat need to have more regulation? Does it need to become on the radar of the central banks and let them create some type of digital currency that's really not cryptocurrency, but a form of digital currency, because the world is really leaning toward that, because it helps to facilitate cross-border payments, right? And that's really the essence, to reach out to people that are unbanked. But if you're unbanked, do you really need to be banked, right? Or do you just need an alternative means in order to function similar to the people in the developed world, right? What is it really that's needed in the whole crypto world when it comes to personal finance, investments, alternative investments, or ways to help people that may be unbanked, maybe help people that don't have access to regular computers or regular internet or regular phone systems. What is it that is needed, right? Is it cryptocurrency and regulation by central banks, federal government, or is it just access to where they can make their own decisions? Microfinance is a big deal, right? And so these are things that I want to talk about and I want to explore with you on Blockchain Speaks. Today, though, I'm going to get into something very interesting, because a lot of you heard about TerraLuna, right? TerraLuna was, a cryptocurrency that was trying to create this stable coin, this UST, Luna coin. But what they did was they didn't really, anyway, I got some information I'm going to read to you. This is like the Blockchain Speaks. It's like a news show, so to speak. So bear with me. The other ones I didn't go, I didn't do them live. I recorded it, but today I'm going to go live and we're going to talk about some of the things that, I noticed happening in the economy. All right. So let's see if we can pull up some, let me find my agenda here and we'll talk to the agenda and see if I can get some information on tap here. All right, let's see here. Where's my information? All right, it's not coming up. Interesting. Oh, I know what. I did it wrong. Sorry, I'm just not good at this. It's weird. Let's see here. Let's go over to this file and maybe it'll let me put this file up here. Oh, okay. It's trying to find an actual PowerPoint document, which that's not what I'm looking for. Okay. All right. Well, I guess that's not going to work. Yeah, I apologize. I thought I had that ready for you. I'm going to have to do something different. Let me pull up this article. If I can't pull that up, then I'll just have to pull up this article for you. And then maybe we can go from there. All right. Yeah, let's do that. Very odd. I don't understand. All right, so since that's going kind of weird, we're going to open up this over here, and then I will pull up that new window and we'll talk about it. Okay. Okay. All right. Bear with me and I will get this up and we will have a great conversation about some of the key things that are happening right now. Like I said, I did have an agenda somewhere, but it's weird. I thought I could pull that up. It's very, very odd. Just hadn't seen it. All cover posters. Yeah, very odd. Very, very odd. Okay. All right. So looks like we have a few folks online. Let's see if we can go get these slides. All right, that's not what I'm looking for. Let's go over here. Okay, let's go there. All right. All right, 1 second. I am pulling up that. I'm just trying to get my slides. For some reason, it's not giving me the slides that I have prepared for you, which is strange because normally that works pretty straightforward. So I'm not sure what's going on here. So I'm going with plan B. Plan B. But don't worry, I got it. So anyway, who do we have on today? I know. You're probably like, come on, man. But hey, look, maybe you can grab, a cool drink, some snacks or something. And as soon as I get this pulled up, we will be cooking with gas. So I got me a little iced coffee going right here. So I think I'm going to have this up shortly. It should be. Yeah, I think I got the right one now. But yeah, I don't know if you want to type in a comment or let me know where you're checking me out from. That'd be cool. And if you've seen any videos on my site, let me know. Let me know who's out there. Who's out there? I see a few people on. So what's going on? What's going on? I appreciate it when somebody takes the time to check it out, stop and look, see what's going on the broadcast. Okay. All right. So my computer. Oh my gosh. I don't know. Your computer slow down, and when you're really needing to do something, does it like just lock up on you? Because mine is does that frequently. By the way, yeah, I know. You're like, Rashid, we don't really care. I get it, no problem. I'll keep it moving. Let me get my slides up. Like I said, this is very odd. That's all right. We're gonna dive in. All right. So that didn't work. All right, plan B. Let me go ahead and show you something right quick. And if I can get this to come up, my goodness. I guess I'm going to use Zoom next time. StreamYard is acting up for sure. Let's see. All right. All right. Looks like we have some movement. Okay. Got it. Got it. Got it. All right. All right. All right. All right. Let's do that. Okay. All right. So what I'm doing right now is I am reaching to see if I can find, trying to get my slide to populate, and that's not happening because it's not happening. So let me try something else here. What is that? That's not what I'm looking for. All right. So give me 1 second and I will do that. Okay. Let's go here. Let's go there. Let's go here. Y'all just don't know, man. This is craziness. But you're gonna appreciate it whenever it gets done. Just so you know. You'll be like, oh, that's really cool, Rashid. You yeah, you did an awesome job there, sir. It's crazy. Yeah, it's craziness. All right. Yeah, you would think that this would be easy, but at times it gets a little weird. Wow. Wow. I did not realize it was going to be this difficult. Absolutely no idea. It was going to give me this kind of headache to do something as simple as what I was trying to do. Golly, this is weird. Okay. There we go. Let's bring that up. Let's move that over there. Let's move that there. And let's drop that in there. And you know what? After all of this, I think we are cooking with petrol or something like that. Okay. Wow. Okay. Not responding. That's weird. Very weird. All right. All right. So if you're still with me, oh my gosh, this is crazy. Oh, I know. I know. I know. Hey, it's a Sunday afternoon. You're probably just chilling, relaxing. I'm sure nothing, dramatic in your life. Uh, oh, I cannot understand. Now it's saying that they got a problem with my file. Come on, man. What else we got to do here? God, dog. This is going crazy. I don't understand. Let's see. It's interesting. Okay. What if I do that? What do you think? Bam. Bam. Now we got something. All right. Woo. Look at here. Look at here. So everybody, here's what's going on. I created some slides. Then I created some notes to those slides so that I could give you just a really quick kind of news type update on what's going on, with the trouble with crypto. Talk a little bit about exchanges and in investments and how those work together so that you can just get a picture of the industry, like what's going on, why did the market crash, what's the repercussions here, how do we bounce back, what do we need to do, right? If you have crypto, you got crypto in any of these exchanges out here, this is giving you just a little highlight on just the state of crypto, and really the state of the exchanges that handle your crypto. All right. So interesting enough, right? I was looking at some headlines. And so if you saw my last episode, 2 episodes, well, the first episode was a couple of weeks ago. And I talked about, like I said, Coinbase and then the effect it had on, their staff and the Coinbase. They went public and the price, just like everything else. It goes up really fast and then it drops and starts to correct itself. And so all of that happened. Well, today, I wanted to talk about TerraLuna. I want to talk a little bit about there's some really great platforms out there that have slowed down. I'm talking platforms that's been around for like a year, 2, 3 years, been paying consistently. And I noticed in a Telegram group that people were not being paid their withdrawals, and they were like, "Hey, what's going on?" And they said, "Hey, give us 72 hours. Let us, get with Binance, and we can try to take care of this." Well, if you don't know, in the crypto space, Binance Exchange, Binance US and Binance International, they've been a staple in the exchange. They are powerhouses when it comes to API into their particular spot trades, right? A lot of times, different vendors or platforms, they actually use Binance or recommend Binance as one of their primary spot traders. So basically, what happens behind the scenes when you have an actual platform like a Novatech or EmpireX or some of these other ones out there, IPC, some that's come and gone, even the Cash FX, they actually have traders that trade through the Binance exchange, and they utilize that exchange because it's already live, right? They're already doing their thing. It's a massive exchange. Copy Pro traders, all of them. Kraken is another one that's used. Qcoin, BEX or something like that, BKEX. So there are other ones as well, but the biggest one is Binance. So when people use Binance, agencies use Binance. When you actually invest in one of these ROI programs that kind of like a Pegasus or kind of like one of the the other ones out there. I'm gonna talk a little bit about meta fee yielders here in a minute, but these platforms most of them use Binance as their backbone. Like literally, they are trading through a Binance spot trade system. They use leverage and margin in order to get funds and pay you, right? Or they're a Ponzi scheme, one or the other. But the ones that are legit doing the right thing, they are going through Binance to trade, and then they get their funding, and then they pay you. So Binance has to obviously release that fund, those funds that are gained. You're talking millions and millions and millions a day. So one thing that happened, like I said, I think a lot of you probably know about DHF. DHF is decentralized hedge fund. It's been running for a long time, paying, no problem, right? And so with this market crash and everything, Binance said, "Hey, whoa, a lot of them, everybody's pulling their money out. We need to slow this down." And so there's 3 or 4 platforms that I've seen and I've heard people comment on, that's credible in the space. They said, "Hey, we're having trouble withdrawing our funds." And so the response from the platform was, "Well, we're having trouble getting withdrawals from Binance." And I'm like, wow. So Binance is like got a stranglehold on I'm talking many of these ROI projects in this space. And so if you're one of those that really like to go after those hypes, you like to go after hypes are a little different because hypes normally are just money that's circulating, kind of like a casino type setup. It's not really going through an actual exchange or actual trading. But if there are some, then this is kind of that setup. But the legit platforms out there, like a Cash FX, like a DHF, the Novatex, things like this, even funds and there's AJ. What is that other one? There's a new one on the scene as well that I just heard about, but they're actually utilizing trades, coming through Binance. So they're using that, and that's how they basically get their money to pay out, those 3, 4, 5% or whatever they're paying. But when that slows down and people start to rush to get their money out of an exchange because the market is crashing, it doesn't matter who or what agency you are, you're going to feel that pinch. And that's what happened. And so a lot of withdrawals are on hold. Now, we're going to talk about the ones that were directly affected and some of the headlines that based out there in the market. So many platforms, like I said, with the DHF and a few others out there, had to slow down on the withdrawals because the money they weren't able to pull the money out. Binance, their update was, hey, look, we got to slow down on these withdrawals. Sorry. And so, COTPS, SwapNext, all those were affected as well, because they said that's what they were using was Binance. So that, even though arbitrage trading is a great idea, but if the exchanges are suffering, it doesn't matter where your funds are, they're going to get hit. And so they had to slow down on withdrawals, and then eventually they just shut down and ran off with your money. So they don't say they ran off with your money. They just claim that the exchanges didn't pay them, so your money was tied up in that exchange, and now they don't have a way to get it out. That's kind of their story. Over leveraging is kind of what that means. One of the headlines says FTX. So I'm gonna talk about a couple other ones as well. So FTX is a big exchange, right? Ran by man, I just can't think of the guy's name. But anyway, he is like the father of hedge of arbitrage, because of how he actually got his fortune. Gosh, I can't think of that guy's name. It's weird. Simon or something like that. But anyway, he basically took $1 million, went to he saw that the price of Bitcoin was like 10% higher in Japan or Korea. I think it was Korea. On an exchange over there than it was in the US. So he would take $1 million, go to Japan, boom, and he would basically buy it over here and then sell it over there. And so what he was doing was physically going and doing it on the exchange, like physically in the country. And he did that for some weeks. And so pretty much every single day of every week that he did that, for like 10 weeks, he basically brought in like $11 million, from that 1 million that he used at the beginning. So it's kind of cool. And anyway, he obviously continued doing that in a more sophisticated way and earned enough to create FTX. FTX bought a platform that I was using, an app I was using to monitor my crypto, which was called BlockFolio. And I thought BlockFolio was really cool. And then when they changed it to FTX, app, I was like, what happened? Where's my stuff? Anyway, I didn't keep up with it and lost my account. And so, yeah. Anyway, that's a whole nother story. So one of the headlines says FTX extends $250 million credit line to BlockFi. BlockFi. Now, in my research at one point and in the history of my crypto journey, I was looking for ways to put my money into an account that was similar to, your regular institutional accounts and earn, some return on that. When I was doing that research, I came across BlockFi and Celsius. I like Celsius, but I didn't, go forward with it. I did download the app and looked at the information. And then another one was Nexo Bank, right? These are crypto banks. They had a way of, paying back a nice, return APY. And then BlockFi was another one. Okay. So I was looking at these platforms, but I did not input any money in either one. But I watched other people talk about where they were moving into Puerto Rico, Portugal, El Salvador. And these Americans, right, that were moving to these countries, but they were saying, look, all they do is actually invest in crypto and they're getting massive returns APY on these, like 15, 16, 18% return on their funds. I was like, okay. Now I thought that was a lot for like maybe per month. They're like, no, per year. And I'm like, that's it. But when you see how they can maximize that with actual crypto loans, then it became very interesting because of how much they were getting on those loans. And then you start to see the bigger picture on how they were actually gaining more and more and more, where they were actually at about 400,000, in a very short period of time. So if they started with like 20,000, I mean, within like 6 months, they had diversified in these different areas, but very, very, advanced crypto, type investments with these platforms, and easily got to like 300,000, in a very short period of time. And it included, Bitcoin as well. Now, here's another headline that I saw. Celsius stops withdrawals because of extreme market conditions. Now, That's an interesting thing, right? So Hong Kong crypto platform freezes accounts. This is real world, with the crypto. And so when I talk about this, I'm all pro crypto. So I'm saying this because there are a lot of headlines out there that's trying to make people believe that just because crypto had an episode in the market similar to what regular stock market has done numerous times, it doesn't run people off. I mean, still people invest in stocks, invest in real estate, invest in crypto. So you're not going to, scare people off just because, the market had some challenges once or twice. That's happened historically with stocks. So I want to just let you guys know I'm pro crypto. So it's all good, but you have to be able to understand, this industry. At the same time, you got to keep your ear to the ground, but you want to know, where do I put my money and how do I make my crypto work for me? That's the key. Okay. All right. There's going to be fluctuations, there's going to be volatility, but you just have to put it in a place that it's going to work for you. All right. So Celsius has been compared to the systematic risks like the Lehman Brothers did in 2008 in their financial crisis. So what role did Lehman Brothers play in the financial crisis of 2008? So they're saying Celsius was doing some of the same practices that Lehman Brothers was doing, systematically risking your funds within the crypto space, right? So very interesting comparison, but think about that. And I'm gonna read some more to you. Okay. So with that being said, many claim, so during this crypto kind of, downturn, that's what we're really kind of talking about is crypto, does it need to be more regulated? And what is the way, in your mind, audience, to get crypto more mainstream, or should it be more regulated, or should central banks and federal banks and all that kind of stuff step in and try to control it? How do we protect people at the end of the day where they can still invest in this alternative financial investment, right? So so many claim that the lending firms are promoting unrealistic or implausible, right, interest rates. Celsius, BlockFi, Nexo. So these are the areas that the article was talking about. And then so he says, when Celsius rehypothelated, right? Hypotheated. That's a word that's crazy. I don't know where they got it from, but it's used when Celsius rehypothelated loans. This is what that means. If you don't, I don't know the term, so I'm gonna read it to you. Using borrowed assets as collateral for another loan. So rehypotheated, or whatever that word is, means when you're using borrowed assets as collateral for another loan. Think about how crazy that is, right? But people have been doing it for a long time and making a lot of money doing that. Because here's what happens. When you're using borrowed assets as collateral for another loan, right, it gives the depositor or whatever greater leverage to attain better returns in the good times. So when things are working fine, right, and you use borrowed assets as collateral for another loan, it gives you those greater leverage so you can attain better returns, right? So in essence, when you think about MetaFi yielders that recently, in the last couple of months or so, came out and says, hey, look, the CEO explained that, look, people want to know how we're getting 3.3%, per day, and we can pay that out sustainably. Well, he was trying to explain that, his algorithms that's created from his software, they were getting massive returns, talking thousands of percent returns. And so what they were doing was taking funds put into the system, and they were loaning those out to people that wanted to pay 900%, which we know that's kind of ridiculous. But that's what he was trying to explain, was there are people out there that can't get funding. They can't get loans. They can't, their credit is shot. And so they want to use crypto in order to get these loans so they can go ahead and make money on another investment somewhere else. And so through his system, he was taking money from us, millions of dollars, and putting those into his system and aggregating that to a point where he had, hey, look, I have, $4 million that we can loan to you in Bitcoin for 30, 60, 90%, up to 900%, which I think is ridiculous, but he explained this. So when they talk about the rehypothecated loan, they're saying you're using borrowed assets. Our money goes into this fund, right, MetaFi, and when that money gets into that pot, you're using it for another loan, and you're making money from that return, and then you're paying the people that you borrowed the money from. That crashed and burned in a horrible way. Okay, so basically, MetaFi was using this software strategy, and it crashed and took millions and millions of investors' funds down with it in the last month or so. All of this circulates with the term decentralized finance, or DeFi protocols. So what is DeFi? So decentralized finance is really parallel to traditional finance. If there's a loan process in fiat currency, there's a loan process in digital currency. If there's a loan process in an IRA in regular, then there's a IRA in crypto. If there is, trading in Forex, there's trading in crypto. And so decentralized finance is basically similar to what we know. The only difference is there's no central body that's controlling who gets what and how it goes. It's pretty much a digital process. So basically, you can trade any asset, any digital asset, and deposit one asset and borrow against that asset, right? And pay a lower rate and get a higher return on your deposit. This right here is a very complicated construction or chains or limbs of leverage, right? So all of this boils down to, if I'm going to borrow money from one and then I'm going to lend it the borrowed money, right? Because I got to pay that back at a point. So I'm trying to get a higher return on my money that I'm lending than what I borrowed. Now, like I said, construction, a complicated chain or limbs of leverage. I'm using leverage based on somebody else's money that I got to pay back. And sometimes this is all digital, nobody controlling it. You can change it anytime, you can shift, you can up, down, you can do all of that behind the scenes. And that's where trouble brews ridiculously. And thus, we see the market go belly up. All right, so that's a little bit about kind of what happens when things don't go right in the crypto space. That's similar to your traditional finance. What I want to do now is talk a little bit about an article that really dove into the problems with the TerraLuna issue. I'm only going to go through a little bit of it, then I'm going to shut it down because I don't want this, to be too long, but I do want to provide some information on the topic. All right. So in one of the articles I saw, I talked about crypto exchanges halting withdrawals and deposits. What does that mean for investors? So that was a pretty good article. And then I saw this other article, and the guy was very, very critical of crypto. You could tell that he is definitely, bearish on the whole issue of crypto and believes that crypto is just a big Ponzi scheme anyway. So, take it for what it is. Like I said, I'm pro crypto. So I'm just reading it because I found it an interesting read, and it did give us some highlights to what really, goes on when you're dealing with, basically tossing this whole complicated construction of leverage with borrowed funds. This is the kind of the result, and this is why I wanted to talk to this. And I'm going to read a little bit from the article because I kind of want you to know exactly what I saw. So here's the guy talks about this TerraLuna issue, right? So let me just kind of go there. He started off with the Celsius, and there's another crypto hedge fund called Three Arrows Capital. They had large positions in each other, right? So they were invested in each other and in Terraform's Anchor protocol. See, that's what I'm saying. That Terraform had to be invested somewhere. They had to be borrowing funds from somewhere, right, in order to start this whole process to get the stable coin online. And so basically using the borrowed assets as collateral for another loan, they basically were winning in the good times. The crypto investment firms played the hottest markets in crypto. These DeFi protocols, right, a way to automatically trade almost any cryptocurrency against any other crypto or any other digital asset. Now, here's where it gets kind of interesting. He said you can also create an asset out of thin air, doing a couple of trades, assign it to a price tag in dollars, even though your token's price is really in some other token, right? Priced in a third token, and then that being priced in dollars. Okay. So you're basically saying, I have a digital asset and I'm going to peg it against another digital asset because I say so. And then I'm going to give it a dollar, equivalent. Okay. That's fungible, right? So now you got this dollar equivalent, and that's where the stable coin concept lays. Now it's not the real deal. It's the concept is in that formula. This allows you to assert a market cap of millions or even billions if you want. Terraform UST token and its twin token Luna were created and valued in the same way. Nothing based on nothing, but they created it based on a third token. UST was touted as a stable coin, reliable, worth $1, and backed by Luna. Luna is the foundation, right? The company or the foundation. It could be one person that, raised funds, but it's a foundation, right? But UST and Luna were backed only by a concept or an idea, and by Anchor, another investment vehicle that offered 20% interest on UST deposits. So Anchor basically was the hedge fund or the legitimate actual investment agency that was handling the funding side of it to grow more capital in the background. They had to have something to do that with, and that's where Anchor came in. Okay. UST, Luna, and Anchor collapsed in May. An alleged $18 billion in UST went to zero. Bitcoin crashed from 36 to down to 26,000. Okay. Now, that's really a very short version of how we got to the issue where everybody, blamed the crypto industry when, the UST of Luna went to zero. Got it. Now, just a little bit more on that issue. You have retail dollars that were poured into because they believed that Luna was doing something, major with their UST token. When that happens, a lot of people get burned. So crypto exchanges such as Coinbase, Gemini, Crypto.com, where all the outside dollars flowed in and out of crypto, all three announced massive layoffs and started to tighten up on withdrawals. Binance was one that put a pause on withdrawals. Coinbase basically said, look, we're going to have to shut down for a little while. And I've been having a Coinbase account. Yes, I had challenges with that one as well. And I couldn't withdraw anything. So I know how bad that one was. Crypto.com, a lot of publicity out there, suffered as well. Now I'm gonna tell you, FTX didn't suffer at all. FTX was giving out loans when these cats was shutting down and laying off people. So it's very interesting how that worked. And I actually looked at, and he references the 60 Minutes Australia segment. I was watching this 60 Minutes Australia episode, and the reporter said that he had invested in Bitcoin, or a friend had influenced him to do that. And there was another guy that was considered a billionaire from Russia living in Australia because of his investments in crypto. And on paper, he was worth over $1 billion, right? He didn't have liquid $1 billion, but he had, on his balance sheet. And so the guy asked him, how much have you lost, with this, whole Luna crash? He said he lost about $600,000, right? So obviously, the reporter wanted to get a reaction. And the guy looked at him and said, it's happened before and it'll happen again. But I'm not bothered because the market goes up, the market goes down. Bitcoin always bounces back. And so like I said, I'm pro crypto because this is an alternative way that levels the playing field. And when you don't have the restrictions, you don't have a lot of governmental hands in that, then the people that are outside and whereas we know that traditionally it was set up that way, haves and have nots. We know that the system was designed to where, hey, if you have money, you pretty much control everything. And so whoever controls the banks, whoever controls the central banks, federal banks, all the way down, then we know that system is set up for a certain group of people, right? And so then you have other people that don't have access to any of that. And why is it that, 200 years go by and nobody's seemed to figure out a way to give them access to the banking system if they really wanted them to be part of it? Okay, but then they don't even have enough funds to put into a banking system, right? So there has been a lot of restrictions on bringing people that don't have the ability to bank, unbanked, or the people that have, financial insecurity. These are, underdeveloped, areas of the world. This has always been a problem. And when cryptocurrency comes along, blockchain comes along and try to help that situation, then you see all these challenges here, in the market. And so I think that you have they see the surge and they see that there's an increase in the cryptocurrency adoption from ordinary people and retail investors and accredited investors and institutions, because they want to open the door and give people an opportunity to get, at least a foot in the door, let alone a leg, an arm, or half their body. But all of a sudden, something like this happens to the whole market. How is that, right? When TerraLuna is trying to find a stable coin, they're trying to match what's happening out there. So there's something that backs that cryptocurrency, but it backfires in a very short period of time. I think Trexo had the same situation back in the day, and people call it a scam and all that. But Tezo is what it is. Tezo was doing that, and now they have a great blockchain and they're supporting a lot of great events. So you really have to dig deep to find out what's going on behind the scenes and who's really behind the publication of good and bad information. And that's always going to be the case, because the truth lies between two things: your story and his story, and the truth is in the middle. All right. So, that's really what I wanted to talk about today. I don't want to get into too much more, but on our next episode, we'll talk about some of these other issues. We'll definitely get into some conversations about some actual programs. One of the things I will do is give you some updates on, some new programs that have been affected in one way or the other. I will definitely give you some updates on the Saphir Global. We'll talk a little bit about Zenith Technologies and their new acquisition, strategic partner with Tupan, which is a environmental DeFi token. It's a great project with a investment fund that's saving the Amazon rainforest, so you can have opportunity to learn about a program that pretty much saves the earth. Really cool. We'll talk a little bit about Avanac, which is a aviation on the blockchain concept that hasn't been done before, but is definitely new and something that you want to find out about, because you may be able to take a private jet flight and you didn't even know it. So we're going to talk a little bit about that and give you some updates on Pegasus Pro Trading, one of the really premier trading platforms out there that has something that's different from any other platform when it comes to ROI type crypto platforms. We'll talk a little bit about CoinHub and the controversy of utilizing the terms Fidelity or Fidelity International and Fidelity Fund for their project. And we'll give you the goods on, the investigation behind that, as well as the performance of the decentralized application. But as well as, in probably episode 5, we're going to talk about some of the newest and most profitable programs out there, and then some of the challenges that are still happening in the Forex world, as well as, using a broker or not using a broker. Should I go with AI, a bot, or should I do my own trading? There's some really, really good arguments on both sides, but I'll give you all that information probably in episode 5. And we'll talk about, projects like Validus and Paraiba. We'll talk about Zifra and the downfall of Zifra and how they pretty much have been assimilated into what we call Decentra. We talk about Crown Global, which is a private exclusive club, so we won't be able to go into detail, but I will definitely highlight that for you. So those are some of the things we're going to talk about in the coming episodes, and we will definitely revisit some of the headlines, and we'll talk about, some of the bear, bull, Bitcoin, and blockchain developments as we move through the Blockchain Speaks broadcast. So I thank you for being a part of it. Definitely check me out on blockchainspeaks.org, and we'll be here maybe next week, same time, same bat channel. It is always a pleasure. We live, we learn, we earn, and this is how we help our communities grow. Thank you for joining me today, and I look forward to seeing you next week. Peace, and I'm out.